Got to say, this week in the markets looks like it's going to be a wild one. We've got a ton of sources to dig into, and well, let's just say it's not looking like smooth sailing. Nvidia earnings are dropping. Everyone's watching them. They're the big dog when it comes to chips these days. And then there's that tech sell-off we saw last Friday. Got everyone wondering if that's the start of something bigger. Plus, crypto is still surging, which is always interesting. And we found some pretty juicy trade ideas, both bullish and bearish. You ready to dive in?
Absolutely. I think this week could be a real turning point for a lot of investors, so we've got to break down what's going on.
Yeah, for sure. So let's start with that tech sell-off on Friday. Seeing a big chunk of the S&P 500 in the red, especially those big tech names, definitely got my attention. What should our listeners take away from that, even if they're not like glued to their trading platform every second?
Yeah, even if you're not a day trader, a broad market move like this can be a sign that investors are shifting how they're feeling, like a wave of uncertainty moving through the market. And one way to measure that uncertainty is the VIX. It's often called the fear index.
Okay, hold on. Back up for a second. For those of us who don't speak Wall Street lingo every day, what exactly is the VIX? And why should we care if it's jumping up or down?
You can think of the VIX like a gauge for how anxious the market is. It measures how much the market thinks prices are going to fluctuate in the near future. So when the VIX goes up, it means investors are getting nervous, and that often leads to more selling.
So it's like everyone's looking around, wondering who's going to panic first and head for the exits.
Exactly. And on Friday, the VIX jumped up above 12%, which just adds fuel to the fire. It's telling us that this sell-off wasn't just a random blip. There's some real anxiety brewing.
Interesting. So is this a sign that we're heading for a full-blown market correction? Or is it just a little bump in the road?
That is the question, isn't it? To figure that out, we need to watch the S&P 500's support level, which is right around $585 right now.
Support level. Okay, another Wall Street term I need a translation for.
Think of it like a floor holding up the market. That's the support level. If the market drops below that floor, it could trigger a cascade of selling, like a chain reaction.
So 585 is the line in the sand. If we break through that, things could get messy.
Yeah, exactly. And remember that gap from the election rally. If this keeps going down, we could see the market filling that gap, which would mean even more decline.
Okay, so we've got this backdrop of market jitters, and then enter Nvidia stage left. Their earnings report is coming out this Wednesday. Talk about adding fuel to the fire.
Yeah, it's definitely the main event this week. Nvidia is huge, and how they perform often sets the tone for the whole tech sector.
And everyone wants to hear what they have to say about AI, right? I mean, that's the buzzword everyone's using these days.
Absolutely. Analysts are laser focused on their AI revenue, but it goes deeper than that. They're going to be looking for clues about how healthy the whole semiconductor market is, which has been struggling lately.
Yeah, it's kind of funny how one company's earnings can affect the whole market like that. It makes you realize how interconnected everything is.
It is. It's like a giant Jenga game.
Yeah.
Where every block is a different company or sector, pull the wrong one out, and the whole thing could fall apart.
And to add even more drama, Nvidia's stock is sitting right on that critical support level. What was it again?
$140. It's like their stock is on a tightrope. And these earnings could be the gust of wind that pushes it one way or the other.
So for the average investor trying to figure all this out, what's the key takeaway here? Should they be buying Nvidia stock, selling it, or just watching from the sidelines?
That's a tough one. Will strong earnings be enough to overcome all this weakness in the market? Will it push the stock higher? Or will Nvidia get pulled down with everything else? It's a tough call.
Well, I guess that's what makes the market so exciting. Never know what's going to happen next. Speaking of earnings, Nvidia is not the only company in the spotlight this week. We've got a whole bunch of other companies reporting, and some of them could really shake things up.
True. We've got giants like Walmart and Target reporting, too. Their results will give us a peek into how the average consumer is feeling, which is always a good economic indicator.
Yeah, and I'm curious about Snowflake. They're known for some pretty big price swings after they report earnings.
Oh, yeah, they are. Snowflake earnings are not for the faint of heart. Their stock can jump or drop by double digits overnight. Exciting for some, terrifying for others.
And then we have Zoom. They've become a part of everyday life now. But they've been facing some challenges as people go back to the office and back to in-person meetings. What are analysts expecting from them?
Well, there's a lot of debate about whether Zoom can keep growing like they were. Now that the pandemic boom is over, analysts will be looking to see how they're adapting to this new environment and whether they can keep innovating and expanding their offerings.
Makes sense. And speaking of adapting, We can't ignore what happened with Netflix over the weekend. Those server issues during that big boxing match, that could really hurt them, especially since they're trying to be a major player in live streaming.
Yeah, it's not good for them. It could impact how many subscribers they have, especially if people start to question whether they can handle the traffic. Remember, their stock is trading near all-time highs, so any bad news could trigger a sell-off.
Right, $825 a share is not cheap. Makes you wonder if they're due for a correction. Is that $800 support level we talked about going to come into play here?
It might. It'll be interesting to see how investors react to this news and whether it shakes their confidence in Netflix's long-term plan.
Okay, so we've got tech stocks on edge, earnings reports keeping everyone guessing, and then we've got this whole other market doing its own thing. Crypto, Gitcoin, and all those other altcoins are still surging. Like they don't even care about the rest of the market's drama.
It's interesting how crypto is reacting to this environment. Seems like there's more optimism now about regulation, especially with the election coming up.
Yeah, there's this whole idea of crypto being a hedge against political uncertainty. Seems to be catching on with some investors.
Right. If we step back and look at the big picture, it seems like some investors are looking for assets that aren't so tied to traditional politics.
But crypto is known for being super volatile,
Right.
right?
Oh,
Didn't we just see a huge crash not that long ago?
absolutely. Things can change really fast in the crypto world. What goes up can come down just as quickly. So while this surge is exciting, we've got to be careful.
A good reminder for all investors, no matter what they're trading. So we've got this mix of uncertainty and opportunity in the market right now. Let's get down to business. Talk about some specific trade ideas that stood out to us in our research. What are some stocks that are looking interesting this week?
Well, we've got a mix of bullish and bearish setups to discuss. Kind of reflects how uncertain things are in the market overall.
Let's start with the bulls. What stocks have the potential to really take off this week?
Palanters have been on my radar. They're making some moves in the AI space. Their stock has been looking good lately. Actually, they had a pretty impressive gain on Friday, like 11%.
Whoa, 11%. That's a big jump. What levels should we be watching for with Palantir?
Keep an eye on 66.50. If it breaks above that, we could see it going even higher, maybe to 67 or even 70.
So that's a potential buy signal for anyone feeling bullish on Palantir. What else looks promising on the upside?
Affirm is another one to watch. They're a major player in the buy now, pay later world. Their stock has been holding up pretty well, even with all the market turmoil.
Yeah, I've heard good things about Affirm. What price level would tell us they're about to break out?
A move above 57.80 would be a strong sign. It would mean the buyers are in control and the stock's ready to run.
Okay, so Palantir and Affirm for the bulls. Now, what about the other side? Are there any stocks that are giving us warning signs?
Meta has been struggling. They're facing more competition, more scrutiny from regulators, and their stock is stuck below that $600 resistance level.
Yeah, that 4% drop on Friday probably didn't help.
Nope. If it keeps getting weaker and breaks below 590, it could mean even more downside.
Okay, so approach Meta with caution. What else is on your bearish watch list?
Netflix is still a bit of a wild card. Those server issues could be a bigger deal than people think, and their stock price is already assuming everything goes perfectly.
So is that $800 support level the line in the sand for Netflix?
Could be. If the stock drops below that, it could trigger a wave of selling, and we could see it falling even further.
All right, so we've got bullish plays, bearish plays, and then we've got this one trade that just makes you scratch your head. Someone's betting big on Walgreens, a company that's been having a rough time. So what I love about the markets, always a good mystery to solve.
It's a strange one for sure. Someone just dropped $838,000 on Walgreens call options. But here's the thing. These options don't expire until 2027.
2027, that's like forever in market time. What are they thinking?
That's the million-dollar question. To make things even weirder, Walgreens has been on a downward spiral for years. Their stock has gone from $100 to around $8.50. That's a huge drop.
So this trader is basically betting that Walgreens will make a miracle comeback.
It would take a complete transformation for Walgreens to make that bet worthwhile. And here's where it gets really interesting. These call options have a strike price of $25.
Okay, hold on. Just to make sure everyone's on the same page. So those of us who aren't options experts, can you remind us what a strike price is?
Sure, the strike price is the price the option holder can buy the stock at.
Okay, so this trader is betting that Walgreens won't just recover. They're betting it'll go above $25 a share by 2027.
Exactly.
Which seems crazy considering where it's trading right now. We're talking about a company that's been closing stores, laying off employees, facing huge pressure from Amazon and all those online retailers.
It's a risky move, to say the least. It raises a lot of questions. Does this trader know something we don't? Like some secret turnaround plan? Are they expecting some big acquisition or partnership, something that could really revive the company? Or are they just out of their minds?
Yeah, it's like a Wall Street mystery. But before we get too lost in the Walgreens saga, I want to talk about this bigger theme of volatility. It's come up a lot today. Feels like the market's on a roller coaster, and a lot of investors are getting queasy.
Yeah, it's definitely a turbulent time. And we see that reflected in the VIX, which, like we talked about earlier, measures how fearful and uncertain the market is.
Right. So what's causing all this volatility? Is it just the usual earnings season jitters, or is something bigger going on?
Well, earnings season definitely plays a part. Like we saw with Nvidia, Snowflake, and Netflix, earnings reports can cause huge price swings, especially when they don't meet expectations.
It's like every earnings report is a potential landmine, waiting to explode and shake up the whole market.
Exactly. And this year, those explosions seem even bigger and more unpredictable. But beyond earnings, there are a few other things causing this volatility.
Okay, I'm all ears. What else is keeping investors up at night?
Well, inflation is still a big problem. Prices are going up everywhere, consumers are feeling it, and that's making the Federal Reserve raise interest rates, which can slow down the whole economy.
Right, it's like they're walking a tightrope, trying to get inflation under control
Yeah.
without causing a recession.
Exactly. And on top of that, we've got all these geopolitical risks, the war in Ukraine, tensions with China. It's a lot for investors to handle, and it's creating a lot of uncertainty.
No wonder everyone's feeling a little jumpy. So in this kind of market, how should investors navigate these choppy waters?
That's the question everyone wants answered, and I think it comes down to a few basic principles. First, stay informed. Don't ignore what's happening and hope it goes away. Read the news, follow the earnings reports, keep your finger on the pulse of the market.
Okay, so knowledge is power. What else?
Be adaptable. Don't be afraid to change your approach. The market's always changing. And your investment strategy needs to be flexible. What worked last year might not work this year.
So be like a chameleon. Blend in with the changing market.
Yeah,
I like that.
exactly. And finally, don't forget to manage your risk. Don't let your emotions take over and make you do something impulsive.
Right, FOMO can be dangerous in the market.
It can. Stick to your plan. Diversify your portfolio. And don't risk more than you can afford to lose.
Good advice. So stay informed, be adaptable, manage your risk, and maybe keep some Tums handy for those earnings season stomachache.
Yeah, good idea. But even with all the volatility and uncertainty, there are still opportunities out there. This week especially could be a turning point for a lot of things.
Ooh, I love a good turning point. What should we be watching for?
Well, like we said, Nvidia's earnings report could set the tone for tech for the rest of the year.
It's like they're holding the future of tech in their hands.
Exactly. And those support levels we discussed, $585 for the S&P 500, $140 for Nvidia, those are crucial. If they break through those levels, it could mean more trouble ahead. But if they hold, it could mean the selling pressure is letting up.
Okay, so those are the big trends to watch. Now let's zoom back in on some specific stocks. We talked about some bullish plays earlier, like Palantir and Affirm. Are there any other momentum plays that have caught your eye?
I'm watching Wells Fargo. Bank stocks took a hit during that sell-off, but they might be ready for a rebound.
Interesting. What are the key levels for Wells Fargo?
If it breaks above 74.50, that would be a bullish signal. Could mean it's going to go up even more.
Okay, so Wells Fargo is one for the bulls to watch. Now, what about the other side? Any other stocks that are looking shaky?
Disney has caught my attention. It's been trading in a pretty tight range lately. Its next move could be a big one.
So Disney's like a coiled spring, ready to jump in either direction. What are the key levels for them?
If it breaks above 115.2, that's a bullish signal. Probably means more gains. But if it drops below 113, could mean the bears are in control.
Got it. Disney traders, pay attention. Now, before we wrap up this part of our deep dive, I want to come back to that Walgreens mystery. We talked about the trade itself, but what does it tell us about how investors are feeling, about market psychology?
That's a good question. I think it shows how powerful hope can be in the market, or maybe even desperation.
Hope that a struggling company can turn things around. Desperation to find a hidden gem that everyone else has missed.
Maybe both. It reminds us that even when all the signs point one way, some investors are still convinced things will get better.
And sometimes those contrarian bets do pay off, right?
Oh yeah, for sure. But most of the time they don't. The trick is knowing the difference between blind faith and informed speculation.
Easier said than done, especially in a market as wild and unpredictable as this one. I guess that's why they call it investing, and not just easy money. Well, we've covered a lot today, from the tech sell-off to the Walgreens mystery and everything in between. But before we sign off, I want to step back for a second. Look at the bigger picture. What does all this market turmoil tell us about the economy and where things might be headed?
It's a tough question, no easy answers. On one hand, we've got strong consumer spending, unemployment is low, corporate earnings are pretty good, all signs of a healthy economy.
So we're not heading for a crash just yet.
Not exactly, but we've also got that stubborn inflation, interest rates are going up, and a lot of economists think a recession is coming. It's just a matter of time.
So it's a mixed bag. Some good signs, some bad signs. How do we make sense of it all?
That's the tricky part for investors right now. It's not clear cut. There's a lot of uncertainty. And that's why we're seeing so much volatility. Investors are trying to figure out what to believe
Yeah.
and how to position themselves.
So you're kind of stumbling around in the dark.
In a way, yeah. And that's why it's so important to have a long-term perspective. Don't get distracted by the day-to-day ups and downs. Focus on your goals. Stay diversified. And remember that the market always recovers eventually.
Easier said than done.
True, but it's important.
Yeah, it's easy to get caught up in all the headlines.
Right.
And freak out when things get rough.
It is. But remember, panic is never a good investment strategy. Stay calm, stay informed, and make decisions based on your long-term goals, not your short-term emotions.
All right, good advice. So we've talked about the big picture, we've looked at some specific stocks, and we even explored the world of options trading with that Walgreens bet. Anything else we should keep in mind as we head into this week?
I think the most important thing is to be ready for anything. This market loves to surprise us, so we need to be flexible. Don't be afraid to change your strategy if things change.
Be nimble, be quick, ready to pivot.
Exactly. And remember, investing is a marathon, not a sprint. There will be good times and bad times. But if you stick to your plan and manage your risk, you'll be set up for success in the long run.
Well said. That's a great note to end on. This has been a really insightful deep dive, and I know our listeners are going to feel more prepared for whatever this week brings.
I hope so. Keep learning, keep asking questions, and most importantly, have fun with it.
Exactly. Because even when the market is unpredictable, it's never boring. Until next time, happy investing, everyone in a market.